If you can recognize weekly vertical crossovers on our charts, they are your key to creating your own printing press. We want you to practice with us every day, 10 minutes. Figure out how these charts work. Be able to read them. Become a master. And the world is your oyster. Let's jump into what's going on. We see stocks and gold up for the day. Bonds are down. What do we see going on the S&P 500 as we move into this week? We see that so far we have a green spinning top on our Heikin Ashi candlesticks. Great trading. About 100 and maybe 10,000 people have taken that now. On Heikin Ashi means average pace in Japanese, different than your father's candlestick. We want you to get used to using them. We love them. What do we see going on? We see that we have a green spinning top, means indecision, tending up, has a wick on the bottom, which again, we didn't see the prior 8 weeks with all the strong up movement. So that's showing you weakness here. That's why it's a spinning top with indecision. We see the derivative oscillator losing energy. Our all-powerful and important price percent oscillator, however, very similar to the MACD, but a percentage oscillator, is still moving up. For the day, we see that the S&P 500 is up 0.66%. We go to the 2-day chart and we can see that indeed we are trying to pull away from the red signal line. Now, this latest candle is not going to be drawn until the close of the market on Thursday. So we see the prior candle represented Monday and Tuesday's movement. We have a big strong up candle. Perhaps it will close out and we'll pull further away from the red signal line because it's awfully close to being laminated there. Derivative oscillators still negative, even with the first day of the latest 2-day candle being a strong up candle with a wick on the top, no wick on the bottom, after a prior spinning top, indecision, tending up, where we saw that occur. But we really want to see the green. We want to see green as far as the derivative oscillator goes. We want to see that price percent oscillator pull way away from the red signal line. 4-hour chart, of course, crossed over back on the morning of Tuesday the 12th. And we see 3 days of nice strong up movement. We want to see that continue. And the 2-day being strongly moving in the same direction as the weekly for a potential jumping in point. Keep your eye on that as we go throughout the week. May or may not happen. If it doesn't happen, then we don't pull the trigger on a practice trade on the S&P 500. What do we see going on the Qs? Up even stronger, 0.75% for the day. It's our biggest up chart for the day. And of course, we see a little bitty wick on the bottom. It's hard to call that a spinning top. We see a long wick on the top and a decent green up candle. We do see price movement well above where it was the prior week as far as where things topped out. We see the derivative oscillator still losing momentum, but that price percent oscillator, after going about flat the prior week, is now heading up quite nicely. Price movement's just pushing above the weekly trend line. Want to see that continue. We go from the weekly to the 2-day, and of course, similar to the S&P, we see a strong up candle forming, but look how much nicer we see the 2-day price percent oscillator pulling away from the red signal line. We'll see how that finishes off when that candle finishes drawing at the close of the market on Thursday. Now, remember how we talked about after the morning up movement on Tuesday, a potential jumping in point in the afternoon. Did you pull the trigger and do a practice trade? Well, it's doing okay right now. Now remember, after you pull the trigger and jump into a trade, you then continue all the charts all the time, but you focus then primarily on what's happening on your 2-day and your bigger weekly chart. They're the ones that help you figure out if you stay in that trade as to how they're moving. We are happy to talk with you more about this in some upcoming trainings we're going to be putting out for you. So again, pay attention to the trainings that we send out. If you're interested in getting all the materials we have, of course, make sure that you subscribe at chartingwealth.com. Okay, and again, that's for free. Staying on the weekly, going to Bonds, only thing down for the day. Gold was up, bonds down 0.19%. Now we do see things trying to form an up candle for the week. Not super strong considering how down bonds were back on the week ending March the 1st, but it is a green up candle. It's bigger than any of the up candles we've seen over the last few weeks as bonds have really just been sliding sideways. Derivative oscillator still negative. Price percent oscillator trying to head up. So we still have a confirmed weekly up move. We go from the weekly chart to the 2-day chart, and all we really see is, again, more of a sideways slide as bonds don't even top out with their wick as high as they did the 2-day candle before. So we'll see at the close of the market on Thursday just how this candle ends up drawing. Still in a confirmed down move, not crossing over yet. Derivative oscillator losing downward momentum. Price percent oscillator trying to head up. Don't have a trade in bonds because still a confirmed down move on the 2-day chart, confirmed up move on the weekly. Remember, charts have to be moving in the same direction on the weekly and the 2-day. We look at that 4-hour chart, and of course you see where things bumped up in the afternoon on Tuesday the 12th, and then sideways over the course of the day on Wednesday. Derivative oscillator losing momentum, price percent oscillator trying to head up. So bonds have to sort themselves out before we can do anything with them. We go from bonds, and our last chart up for the day, 0.70%. That's gold. What is gold doing? Well, it's forming a green spinning top. That's a solid green. Again, means lots of indecision tending up. It's almost a doji. We'll continue to see how that sorts out. Price percent oscillator still in a confirmed up move, but trundling down a little bit. Derivative oscillator, of course, has already flipped over to negative. We look at the 2-day chart. What do we see? Well, again, this bottom that we've seen in gold bottomed out somewhere around the 121.30, 121.40 mark and sort of slid sideways, trying to move up. We're flat as far as the price percent oscillator goes on the 2-day chart. We see the derivative oscillator losing downward momentum. What's going on that 4-hour chart? Continuing to try to move up, sliding sideways for 2 days. Well, for actually pretty much 3 days. And over the last day, really starting to move up. And again, derivative oscillator gaining upward momentum. Price percent oscillator heading up. Waiting to see again how gold is going to sort itself out. We still have the 2-day in a confirmed down move, weekly in a confirmed up move. So we don't have a trade in gold either, trying to see how it's going to sort out. Is it going to go up? Going to go down? Same with bonds. Well, until they tell us, we can't follow a trend that doesn't exist, can we? And that's what we do. We follow trends. But we can follow that trend on the Qs. That is the Nasdaq 100. That's what we're in the middle of right now. And of course, waiting to see how the S&P 500 is going to sort itself out. Again, we appreciate our Patreon sponsors. If you'd like to get all the special goodies we have to offer, you can find those becoming a Patreon sponsor. Follow the link in the show notes to learning about being a Patreon sponsor. All sorts of great training, short chart training, Bitcoin training, the long quarterly chart training, plus our monthly Q&A, and we analyze once a month the stocks and ETFs you are interested in. And of course, if you haven't purchased our book, please do so. You'll see a link to purchase that in the show notes. Seem to be selling those every single day. We're in our 8th printing right now. We'll get yours in the mail out to you today. If you live in foreign lands, you can order our book. Email us, cw@chartingwealth.com. We'll send you an invoice for $40, and we will ship your book anywhere in the world that actually gets postal deliveries. If you live in the middle of the Sahara Desert and don't have service, going to be hard to get you a book there. We want you to have a hard copy of our book. We don't have a digital version for a reason. It is spiral bound. We want you to use it as a working copy, and we're quite proud of it and want to get one in your hands. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters. Again, let us hear from you, cw@chartingwealth.com.